Komgo. You know, that is really an odd name, but Komgo has been having some success recently, and their success has been in the idea of what they do is they bring people together, and in bringing people together that need to borrow on one side and need to or have the ability to loan on the other side. The biggest challenge in the international commodities market has been validating assets of the person that is using the asset as collateral to get the loan. So you have companies who would tend to lie or be dishonest about what their assets are really valued at. And how do you really value assets? I mean, you might have assets in Singapore and Japan and China and the US. You might have them all over the world. So where and how do you get to where you can validate that those assets are both real and that they're actually worth the amount of money that they want to use as collateral to get the loan? And it's been demonstrated time after time after time that there is a challenge in getting accurate figures as to what the value of the collateral has been. So Komgo was seeking to come to the rescue at that point and be able to bring people together and create a system where they could put assets, put documentation of assets into the system that would not be lost, that would be there permanently. And ING in this case was the loaner of the money, and BB Energy was able to get a loan facility of, it says up here 500 million, and I'm not quite sure here what the 450 was and the extra 150, but we're talking $500 million here that this BB Energy needed to have in order to continue pursuing business. And so they needed to be able to continue to work and get good liquidity in their business so that they could continue growing. So it's the first digital borrowing base achieved by BB Energy through Komgo. Komgo is a Swiss headquartered financial tech company owned by a number of major trade finance institutions and ING Capital LLC, which is the leading finance lender. Okay, so with that, here it states again, fraud continues to be at the forefront of commodity lenders' key concerns when extending credit. Through blockchain technology, Komgo increases visibility by connecting to the third-party providers and supplying real-time data and generating a comprehensive view of the company's trading book. Okay, so Komgo was just the digital agent that brought together ING and BB Energy to be able to show that ING that BB Energy had the assets and were able to get the collateral together. So, okay, so BBE, what BBE does is it's a global and independent oil trading company. In other words, companies like this, what they do is they make sure that they can connect oil sellers with oil buyers, with the sellers with the distillation plants and the places that actually pull together and actually produce the other products out of the oil that get produced for the marketplace. So they have 300 employees in 16 trading offices worldwide and approximately 450 employees, including their downstream businesses that actually do business with them. So Komgo then is the Swiss company, we already talked about that. So Komgo then was successful in putting together the information that BBE needed to provide to ING, and then ING then was able to validate that data and then come together to provide the $600 million worth of financing that they were applying for. All right, so let me hit some questions here. The first question came by Axel, and Axel, you got two questions in there. Do I think at this point the market can recover? I'm assuming, Axel, that you're talking about the cryptocurrency market. I've been through 3 of these downturns already, and yes, I believe it will recover. But watch out for those what they call dead cat bounces. In other words, just when you think it's leveling off and going to possibly start coming back up, just like when it hit 20,000, when Bitcoin hit 20,000, for example, and then hovered there for a time, that can get very tempting to bring for people to want to come in and buy. And now it's down to 19, and it'll level off there for a while. It's not unusual to see Bitcoin go down by as much as 80% before it starts coming back up. I would watch for other indicators outside, and that would be the general markets improving, because people aren't going to invest in cryptos until they're willing to invest in stocks. And if you still see that stock market generally trending downward, I wouldn't really go into cryptos much at that point, unless the dollar, which is going really, really strong right now because there's a lot of other countries out there that are buying up the dollar because the dollar is more stable than even their currencies. If you start seeing the dollar go down, that might be a buying signal for cryptos. But I would really watch what the rest of the markets outside of crypto are doing before you actually got into buying cryptos again. Do I think that this crash will affect how companies like Fidelity view crypto in terms of offering them as retirement investment options? Most assuredly. I think this downturn, as dramatic and quick as it has been, will really make companies like Fidelity think more than once about what they want to do and how they want to pursue going forward. That remains to be seen exactly what they'll do. I think when it stabilizes, they may start going back to it. So, okay. Well, that's an interesting question. Axel just put a question in the chat. He says, so I heard that tokenizing assets can increase their value. I hadn't actually ever heard that. And I don't know how that would be possible. When you tokenize it, sometimes it can increase value just because you can spread it among several people and there can be some excitement in buying a part of an asset. But it would be more fluff valuation increase rather than a real increase. So I don't think that any appreciable increase would ever happen just because you happen to tokenize an asset. Okay. All right, we have another question. I see a number of places in a tokenizing world of art. Yes. Kind of like the wine example from a few weeks ago. Yes. Lets people own a small percent of an expensive piece while letting the museum display it. Yeah, that would be true. It's great to be able to own a little piece of something. The question is whether it really increases in value or not. I suppose if the art piece increased in value, like if you owned a Van Gogh or something and it continued to march forward in value and it went up to an auction house and got your money, that you would have to be paid off as a partial owner. And at that point in time, you might see an appreciation. Absolutely. But it would be dependent totally upon the art or collectible itself and not whether you tokenized it or not. It's just ownership at that point.